in two. These two are married to one another, and these two are married to one another. Okay, this is recorded at selling price, and this is recorded at cost price. It was a cash sale, so bank is married to sales, and cost of sales is married to trading stock. So that's my first part of transaction analysis. Identify the accounts involved. Second, classify the accounts. There are two assets there. That is bank and trading stock. And they will both increase on the debit and decrease on the credit. And then sales and cost of sales are both owners' equities. Which one is my expense? Cost of sales is my owner's equity expense, and sales is my owner's equity income. Owner's equity always increases on the credit and decreases on the debit. The only difference is whether it's an income or an expense. Expenses always decrease my owner's equity, and incomes always increase my owner's equity. Alright, so it says that we sold the dress to D. Ridwan for 4,904 Rand and 50 cents. So 4,904 Rand and 50 cents. Why am I putting that on the debit side of bank, grade 9s? Because it was a sale. In which journal do we record sales? Cash receipts journal. Now, if you remember this, on what I taught you there, I said to you, when posting to the CRJ, we are going to debit bank and credit all other accounts. I'm busy posting here. Sales is going to be credited and bank is going to be debited. And then this is what's going to happen to cost of sales and trading stock. Okay, but I'm going to explain it all to you now. Okay, so why is my bank being debited? Well, because it is an asset that is increasing because I received money. So I'm going to debit bank. Sales is an owner's equity income. Incomes always increase my owner's equity. Okay, so on the credit side, 4904,50. Right, so I have my debits, I have my credits, everything is in agreement over there. Just want to check here. My cost of sales we worked out here was 2,885. Right, so now we're not finished because remember I said that this account, when we sell trading stock, there's always 4 accounts affected: bank and sales, and cost of sales and trading stock. So this is recorded at cost price. Okay, cost of sales is classified as owner's equity expense. What do expenses always do to my owner's equity? They always decrease them on the debit side. So 2,885 is going on the debit side. And then I know for every debit there has to be a credit. 2,885 on the credit side of trading stock. Okay, so grade 9s, if you write it in this order, bank and sales, cost of sales and trading stock, I just want to draw it roughly for you quickly so you can see what I mean here. So bank is married to sales, cost of sales is married to trading stock. So the more you do this, the easier it will become to understand. So yes, for the beginning you might have to write it out a couple times just so that you can remember it, but eventually it becomes like second nature. So bank is married to sales and cost of sales is married to trading stock. Okay, so if you write it in this order, bank, sales, cost of sales, trading stock, then you can just put all the X's on the outside, if that makes sense. Okay, because we are, if you look here, we are debiting bank, debiting bank, crediting sales, debiting cost of sales, crediting trading stock. And then you'll also notice that bank is increasing and sales is increasing. Cost of sales is decreasing and trading stock is decreasing. They're all on the outside. Okay, so this is basically a formula or a format, and you'll eventually just remember that. Oh, that rhymed. All right, so now how do we take this mess and put it into this block? Okay, so now we need to go and say, right, let's look at bank and sales first. So bank, we said we debited. So just enter it exactly like that. Bank debited and sales credited. Okay, then stop for a moment. Then we've got these two. Let's just do those. Okay, cost of sales debited. And then trading stock credited. Now, out of these 4 accounts, we said that bank and trading stock are assets. So now in this block over here where it says assets, I need to show the effect of my asset. Okay, so what happened to my asset bank? If we look here, my asset bank increased by 4,904 Rand and 50 cents. So there, my asset bank, okay, so we're saying that bank increased by 4,904 Rand and 50 cents. Reason being cash increase. Okay, but I have another asset here, trading stock. Okay, but what happened to my asset trading stock? My asset trading stock decreased by 2,885. Minus 2,885. Now, as you'll notice, those two amounts are different. One is my selling price and the other one is my cost price. My selling price always has to be higher than my cost price because I have to make a profit. Okay, so the difference between selling price and cost price is going to give me my profit earned. Right, so my trading stock decreased over here by 2,885. So yeah, my reason is going to be trading stock decrease. Then what happened to my owner's equity, grade 9s? So if we look here, we'll see that my owner's equity is sales and cost of sales. So now I have to show my profit earned in the owner's equity account column. So profit earned is going to be my selling price minus cost price. Okay, so 4,904,50 minus 2,885, which is going to give me profit of 2,019 Rand and 50 cents. Okay, grade 9s, I'm going to ask that you post the transactions on the 23rd and the 27th. So those last few entries I want you to do by yourself. In my next video, I will post the answers. So follow the 3 steps that I've shown you over here. Identify the accounts, classify the accounts, and show the effect. Also draw your T accounts, and then the next video I will put up the answers and you can assess whether or not you have grasped this concept. Transaction analysis is very important and it helps get those extra brownie marks in your exams and cycles.